Every month I make videos showing how I make hundreds of dollars in passive income from dividend-paying stocks. Yet despite the glitz and glamour of dividends, many are still questioning if this strategy really works. Let's get into why dividend investing is always number one and why dividend investing works so well for people of any age. To start off with, dividend investing provides a consistent stream of income. Shareholders of dividend stocks know they can expect paychecks every month or every quarter. Now, I personally own the beverage company CocaCola. They do their business of selling soft drinks on every corner of the earth, and the money that they don't reinvest growing their business, that actually goes into the pockets of shareholders. Coca-Cola actually has an amazing streak of 60 straight years of paying increased dividends to its shareholders. And this can be an extra benefit for those in retirement. They can bank on that dividend payment to pay for all or maybe even just supplement their income to pay living expenses. Rack up enough shares over time, definitely have the potential to quit your 9-to-5 and just live off dividends. Secondly, companies that pay dividends aren't automatically great companies, but it could be a way to distinguish a company's health. Companies that actually pay dividends, that means their business has matured enough where they can consistently be profitable and are also really disciplined with their capital. It's a way of gauging if they're financially stable. This can be a sign a company will do well during economic downturns, which really test the financial health of companies. A company paying dividends indicates the company is operating at a surplus and can run their business effectively without that extra capital. This is why you generally only see larger blue chip companies pay dividends. As newer companies, they're going to need to reinvest money back into their business as they're looking to continue to gain market share. Another reason to love dividend stocks is that they can reduce risk and volatility in an investor's portfolio. 2022 was a really rough year for the stock market. It was down nearly 20%, but those owning dividend stocks got some relief as dividends can help offset a decline in share price, offering a very juicy cushion during downturns. Companies that typically pay dividends also don't have extreme price swings and have stable earnings. When's the last time you saw McDonald's stock go down 10% in one day? There is a trade-off though, as you probably won't see McDonald's stock go up 10% in one day either. But I'd personally have much smaller price drops than the chances of McDonald's stock going to the moon. Now, I can't guarantee that the stock market will go up or go down every day, but there's a really strong chance that McDonald's will continue that dividend payment every single quarter. Now, certainly my favorite part of dividend companies is experiencing dividend growth. Dividend companies tend to slowly grow their earnings over time, and this means more dividend payments for us, the investors. Now, companies that have raised their dividend for 25 straight years, they're known as dividend aristocrats, and those who have reached 50 years are called dividend kings. Being featured on these lists is a really high honor, and investors often have to pay premium for companies like this because they know they don't need to babysit them. I also love how dividend companies do the work of picking when to pay you. Imagine all the anxiety trying to sell growth stocks at just the right time to live off of them. In times of low interest rates, dividend yields from companies may be higher than the fixed rates government bonds offer. But don't tell that to Uncle Jerome as he continues to hike interest rates to curb inflation. It's well documented that Warren Buffett has a mouthwatering 54% yield on cost on his Coca-Cola shares that he bought in 1988. This is because the price he bought his shares for has actually never changed since 1988, but the amount Coca-Cola pays in dividends has went up every single year. Just own great companies that consistently raise their dividend, and one can enjoy these amazing 50% plus returns just like Warren Buffett every single year. Dividends have accounted for about 40% of stock market returns since 1930 and 54% of the total returns during decades when inflation has been high. Typically, when I look at companies I want to buy, I look at the 5-year growth rate. 7% is about average, so anything double digit or more would exceed my expectations. A company I really love is called United Health Group. They aggressively raise their dividend, which on average has had a 17% growth each of the last 5 years. Dividend investors don't need to just wait on dividends to make them rich. Companies can also experience capital appreciation and share price too. Dividend aristocrats have historically outperformed the market, and other dividend-paying stocks, they are, on average, higher quality businesses. UNH, for example, has went up 800% in the last 10 years, all while aggressively raising their dividends. That's not too bad at all. Capital appreciation is fantastic. It's a way to get shielded from Uncle Sam and the IRS, but dividends, they also offer numerous tax advantages. Qualified dividends get taxed at considerably lower rates than ordinary income, such as you working your 9 to 5. Now, depending on what income bracket the investor falls in, they could be paying anywhere from 0% to 15% to 20%, with most people falling in that 15% range and the highest income earners paying 20% taxes on their dividends. The reason why dividends are tax efficient is that the government wants to incentivize long-term buying and holding, as well as giving a reason for companies to reward its shareholders. A company's board of directors determines when to pay dividends and how much. They are often the biggest individual shareholders of a company, so there is certainly an incentive for them to spread that wealth. Not every dividend, though, is qualified, such as those from real estate investment trusts, or MLPs, or money market accounts. Over the past 5 years, I've made over $5,000 in dividends. I've chronicled my dividend snowball and my journey in this video. If you want to see my full $120,000 plus portfolio, check out the Patreon. It's a great way to support a small-time creator, but if you're unable to do so, just hitting that like button and subscribing and letting me know what you think of dividend investing in the comments below, that's enough for me. As always, my videos are found in podcast form under the Collect Cash podcast name. Let me know if I missed anything as to why dividends are so great, and I'm out.
I'm out.